Hey guys, welcome back to the channel. This is Vishnu from SmartSeed Investment. Today I'm going to explain something brand new in the investing world, that is SIF, a Specialized Investment Fund. Now, before you start thinking this is some complicated rich people thing, hold on. I will explain you this in the most simplest possible way, and by the end of this video you will have a complete understanding of what a SIF is and how it is different from mutual funds, PMS, AIF, and whether it makes sense for you to invest in these funds. So let's get started. So imagine you have been investing in mutual funds for a while and you are happy and returns are fairly okay. But mutual funds have certain restrictions, like they cannot invest all their money in one specific sector, and they cannot trade in derivatives, or they cannot short stocks in the market. So due to all these restrictions, the mutual fund is restricted from generating potential higher returns. And this is where SIF comes in. SIF basically stands for Specialized Investment Fund. Here, the fund manager will have complete freedom to execute all the strategies, like going long in the market or investing all the money in one specific sector or trading in derivatives, or they can also go long and short in stocks. So think of mutual funds as a South Indian or North Indian meal. They will have fixed recipes and limited changes, and it is good for everyone. On the other hand, SIF is like a chef special. They will have exciting, dynamic flavors, but it is not for everyone. So what is the ticket size in SIF? It's 10 lakhs. So you gotta have some skin in the game. Also, as I said before, mutual fund comes with lots of restrictions, like they can't go short in the market and they can't invest all the money in one specific sector and so on. So they have to be safe for everyone. On the other hand, SIF is for the informed investor. That's you. If you understand the market and can take some smart risks. So here is another simplest way to think about it. Mutual funds are like a regular school with fixed syllabus and regular classes. And next, PMS, that is portfolio management services, are like private tuitions, quite expensive with a minimum ticket size of 50 lakh rupees, but they pay very personal attention. And then alternative investment funds, that's AIF, they are like international MBA types, super expensive with a minimum ticket size of 1 crore. Then comes the SIF. It's like some college level, more advanced than mutual funds and cheaper than PMS with a minimum ticket size of 10 lakh. It's like flexible but still monitored. Makes sense, right? Drop me a comment if you have understood this analogy. So why SIFs are good? Why should you really care about it? Let me tell you where SIF shine. First is flexibility. Here the fund manager have complete flexibility to invest wherever the opportunities arise. And secondly, lower minimum ticket size as compared to portfolio management services and alternative investment fund, where minimum investment required is 50 lakhs and 1 crore. Here in SIF the minimum investment required is only 10 lakhs. And the third advantage is smart strategies. Here the fund manager have complete freedom over the fund, so they can do sector bets, long short plays. Basically they will do active money management. And at last, it is completely regulated by SEBI. It's not like some shady schemes. Proper SEBI rules will apply for this fund, and they will give you monthly NIV updates, transparency, and all those good stuff. But wait, what about the risk and disadvantages? Now listen, this isn't a fairy tale. SIFs are powerful, but of course they come with certain risks. We all know 10 lakh is not a small amount, so this fund may not be for beginners and those who don't understand the market risks. Secondly, here the strategies are very risky, like they can do sector bets and short selling and many more. If the market turns, your portfolio definitely takes a hit. And of course, there is no guarantee over the returns, and we don't have any historical information to track or validate how this fund has performed over a period of time. And lastly, these funds are not as liquid as mutual funds. You cannot enter and exit daily like an index fund. So be smart. This fund is only for those who understand the market, or for those who have an advisor like me. If we talk about what is currently happening in the market, DSP has already launched their India's first SIF called DSP Endurance SIF, long short equity. And also ICICI, Nippon, SBI, everyone is coming out with their own SIF soon. So what does this tell you? Big boys know that people want more advanced options without locking their 50 lakhs or 1 crore. To wrap it up guys, SIF is great. If you are already into investing and you have got at least 10 lakh rupees to invest and you want to be part of smarter tactical investing options, but you also want SEBI protection, NAV reporting and accountability. However, if you are just starting investing or if 10 lakh rupees forms a very big part of your net worth, then I would say just skip SIF for now and just stick to old good mutual funds. I hope this helped you understand SIF very clearly. If it did, smash that like button, subscribe to the channel and tell me, would you invest in SIF? Yes, no, maybe. Drop a comment below. And hey, if you need any help planning your investment, you know whom to reach out. I have given my number in the description below. See you in the next video. Until then, invest with SmartSeed.